Hello and welcome to fourth episodes of Business Concepts. This episode will conclude our procurement and accounts payable topics, and the next episodes will start covering accounts receivable and sales topics. Here are the 5 topics that I'm planning to discuss during today's video. What is purchase management? A purchase order PO management is a process that you can define your ERP system that controls how a purchase order is reviewed and either approved or rejected. That's an optional setup. You may choose to have it activated or not. For example, you may say that every PO that is created should be a subject of a review before it can be confirmed and approved. Or you may say that any PO that is created by default is assumed to be approved. You can also configure that change management process to be a conditional. So what that means is that you can create a condition that says if PO meets certain conditions, then this PO can be automatically approved. Or if that PO does not meet these conditions, then this PO has to be reviewed and then approved or rejected. So what can be those conditions? The conditions can be, for example, who creates a purchase order. So if employee A creates a purchase order, more senior employee, then these purchase orders will be automatically approved. Another example of condition would be a total amount. So for example, if I'm creating a PO that is under a certain amount, let's say $5,000, then this PO can be automatically approved. There is no need for it to be reviewed. There are also different conditions, for example, what exactly you're buying that can trigger the change management process, vendor that is used in that purchase order, etc. What I'm trying to say is that you can define conditions when the PO change management should be used. The process implies that if let's say a change management process is used, then you will create a purchase order, and when you save it, it's probably going to be in a draft mode. In draft mode assumes that it has not been reviewed yet in a system. Informal approval process may include you printing out that purchase order and bringing it to a desk of your manager so he can review or she can review and approve it. It can also be an email to your manager saying, here's a PO that I created, here's maybe a summary of it, or maybe here's a link to the document itself so you can review it yourself. Please make a decision. The formal approval that may exist in an ERP system may include a workflow, and that workflow will actually trigger the submission of that PO for the review. So once you created that draft purchase order, then you can click on submit. That will the workflow decide which managers should be reviewing that. It can be one, it could be multiple, all depends on how you can configure that workflow. And then that email notification or maybe some sort of notification inside the system is sent to people that need to be reviewing that, and then the decision is made should that PO be approved and therefore confirmed, approved, or it should be rejected and going back to a draft mode. Of course, depending on sophistication of the system, you may also have certain automatic actions inside that workflow. For example, if no action was taken by a reviewer within a certain number of days, that PO can be either automatically approved or automatically rejected. You can also use delegations. For example, if a certain manager goes on vacation, he or she may delegate responsibilities of reviewing those purchase orders to another employee for a specific period of time, etc. It all really depends on how sophisticated the ERP system that you're using and what options exist inside that purchase order change management workflow that exists, right? The bottom line, the purchase order change management is a step that allows you to review the orders before they can be confirmed and submitted to a supplier or a vendor. So we already talked about purchase orders draft status, but now let's talk about purchase order statuses in general. So if you are using change management, the first status of your order probably will be draft. Once it's reviewed and approved, then it's probably going to move on to a confirmed status. So now it's a purchase order that has been confirmed, and you cannot really change it at that point without triggering the change management workflow again, depending on the changes that you make. So once the purchase order is confirmed or approved, then you can actually submit it to your supplier saying, here's a purchase order that I would like you to review and get back to me if you can do that. So the vendor can review the terms that are defined on that purchase order, the quantities that you specified, the purchase prices that you expect to pay, the dates that you expect that PO to be delivered, and then he can make a decision whether he can accept it or he needs to suggest changes, right? And the way for a supplier to review that can be the same as reviewing the purchase order internally. So you can either send an email to your supplier, can send a fax, or maybe if your system has this vendor collaboration functionality, like for example Dynamics 365 for finance and operation, then the vendor can log into the portal himself, review the orders, either accept them, reject them, or suggest any changes, then you will have to be reviewing. Once that had happened, then your PO will be in confirmed status. So it moves on from approved status to a confirmed status. Then, of course, we're talking about received status. So once you receive that first shipment against your purchase order, the status of that PO may change to received. It's only going to be received if you receive the entire order. So for example, everything that you order have been received. In this case, the overall status of the purchase order has been changed from confirmed to received. And that's usually a function. The receiving function is actually something that your warehouse people in the warehouse on the floor actually are performing and updating the system. If, let's say, you got a partial shipment, partial delivery of the PO, then that PO overall will not be received. It still would be in that confirmed open status, but the individual line statuses will change. So for example, you received one line entirely, so that line will be probably received. Or you can receive one line partially. Let's say you order 100 units and only received 60, then this line will be marked as partially received. What that will create, what partial receipts will create, they will create a situation which is called back order. So the back order is a partially received order that has some unfulfilled open quantities. And in certain cases, certain companies may decide to cancel the remainder. So they cancel the back order, saying everything that we received on that first shipment, we're going to update. Everything that's still open, we're going to cancel these quantities, and we're going to basically close that order. And then we may need to create another additional purchase orders for the second shipment that that vendor will send to us. In certain cases, you may choose to keep that order open. So you have this back order that has unfulfilled quantities because you're expecting a second or third shipment from your supplier hitting your warehouse sometime soon, right? So in either case, you will have this option of what you would want to do with partially received order. And then the last step, which is a financial update of your purchase order, is invoice PO, right? So in this case, you get an invoice received from your supplier that says, here's what I shipped to you, here's what you need to pay me for. And what you can trigger in this case is the process that is called three-way invoice matching, and I already discussed it in my second video of business concepts, so you can check it out. But the three-way invoice matching basically allows you to make sure that you are invoiced for what you actually received. So for example, if you received 60, you don't want to approve an invoice for the quantity of 70. And of course, it allows you to check the prices. So for example, if you created a PO and you expected to pay $2 per widget, you don't want to approve an invoice that says that you need to pay $2.50 per widget. So of course the same rules apply, so that invoice can be for the entire quantity that you have ordered and received. In this case, the order becomes fully invoiced. And of course the invoice can be for partial quantities that you received. In this case, it's going to be partial invoice order, and then you have certain orders that are still on order. They have been received, or maybe you not have received the invoice yet. Right, so the multiple statuses. I think something to keep in mind, you have a status of overall order, a purchase order header, and you also have the statuses for each individual purchase order line, and those can be different. Right, so now let's talk about a third topic, which is PO versus non-PO invoices. So as I discussed previously, you can have an invoice that is associated with a purchase order. But in certain cases, you may have a vendor invoice that is not really linked to any purchase order in your system. So those are called non-PO, non-purchase order invoices. When would you use a non-PO invoice? So sometimes you don't want to create a purchase order to pay an invoice from a supplier just because it adds a unnecessary time that you need to go and create a purchase order. In this case, you may just basically choose to say, here's a vendor invoice that I got, and what you usually create in the system is something that's called vendor journal. So vendor invoice journal basically includes all the information from that invoice that you may have gotten electronically or scanned through OCR, but basically it probably includes some sort of invoice number, it will include the vendor ID, and it will include some sort of itemization of what you've been charged for. So the vendor invoice journal is not linked to a purchase order, and it's not really linked to receipt of any stocked items. So it's most probably paying for services or for paying some sort of expense items that are not set up as stocked products in your system, because the purchase order on its own usually is triggered and you add stocked items to a purchase order. So the purchase order probably has more control, for example, three-way invoice matching, as I mentioned, but it actually has more steps to update it from an open status to invoice status. The vendor journal process or non-PO invoice has fewer steps. You still have certain controls available. For example, how that vendor invoice journal will be posted. It can be subject to the same review through a workflow that I already mentioned for the purchase order itself, or you may just create a vendor invoice journal and post it in the same step. Right? But so just to summarize, the non-PO invoices are basically vendor invoices that are not linked to a purchase order document just because you chose not to create a purchase order for this specific purpose, because those are the services that you're receiving, and hence you don't have that link to the PO. But the vendor invoice journal itself will have a reference, of course, to a vendor account, and of course it will have a reference to invoice number or invoice ID. And usually the vendor invoice journal needs to be posted before it can be paid, right? So the open, unposted vendor invoice journal will not trigger any actions on the payable side. Now let's talk about requisitions. Purchase requisition is basically an ability for me as the person that is not part of the procurement team in my organization request purchase of certain services or items. So let's say I'm an employee that needs to buy a brand new desk. I cannot just go and create a purchase order in the system, pick a vendor, pick an item and say, let's just place an order with that specific supplier for the desk that I need. So what you can usually do in the system is to create a purchase requisition. It's a request to say, me, employee such and such, are looking to buy ergonomic desk, and I don't really know the item number for that desk because that item number might not exist. So I just can put a general description of what that desk should be, maybe some specification like in free text format. I don't really know who to buy it from. There may be multiple suppliers that are supplying the desks that I'm looking for, so I'm not going to select the supplier. I will leave it up to a procurement team to decide where they need to source it. But I'm basically saying who I am and what I want to be bought, right? It can be a service, as I said, or it can be a specific item that is not necessarily stocked or inventoried in our system. So I will create a purchase requisition for that, where I may choose a supplier, or may leave it open. I may choose an existing stocked item, or I may just use a free text to describe the item that I need. I may also use from a list of categories, for example, that are available for me to select from. Those are usually called procurement categories. Generally speaking, for example, office supplies or office furniture, I can select that category, and then I can add an additional description to specify which furniture exactly I'm interested in. Once that purchase requisition is created, of course, it will have to be subject of review. Then I will have to click on submit and submit it to a workflow for someone, my manager, a procurement team, to review that requisition, deem if it needs to be approved or rejected based on the need. And then once it's approved, let's say, then it's going to turn into a real purchase order where the procurement team will actually select the vendor, will negotiate the pricing, will negotiate the terms, will negotiate the dates, etc. Right? So the purchase requisition is just a request to buy something that can be turned into purchase order if that request is approved. When you create a purchase requisition, you may select from a list of existing items, as I said, or you can select from the list of the procurement categories that are assigned to that vendor. And the categories that that vendor is authorized to supply is defined in the system by means of some sort of file upload from that vendor. So the vendor can supply an XML file that defines the categories that they can provide to you with maybe some descriptions and some prices, and you can upload that catalog into your system, and then you can use that catalog when you're creating that purchase requisition. So that's what is known an internal procurement catalog that you can upload. Alternative to that will be actually using something that's called punch-out catalog or external catalog. It's an ability to actually link to an external website, a portal that your vendor maintains, and browse the categories and items that are available in that external catalog, selecting certain items that you're interested in requesting, and then clicking on checkout button that basically transfers that item and pricing information into our purchase requisition. So this is a more streamlined way, just because the vendor is responsible for maintaining an up-to-date list of these products and the price list, and you're not responsible for maintaining it yourself by uploading through a file or maybe updating them manually. So that's the difference between the internal catalog that is uploaded through some sort of file upload, and the external punch-out catalog that is basically a link to an external website where the vendor maintains their list of the products. All right, and the last topic for today will be RFQs and RFPs. So RFQs is request for quotes, and the same thing, basically a different term for the same thing, is RFP, request for proposal. It's basically an invitation to a supplier or list or multiple suppliers to bid on the work or the purchase that we're trying to make. So we create an RFQ, request for quote, we select the vendors that we would like to invite for bidding, and then we describe what exactly we are looking for. Again, it can be by means of selecting an existing stocked item and adding it to RFQ, or we can select a specific procurement category. Let's say we would like to buy 25 computers, and we can describe the specification for this desktops, resolution, RAM, memory, etc. And we basically then invite multiple, let's say 5 suppliers to bid on that project. So we need 25 computers, here's the specs, what is your best price? Then we send those invitations to these suppliers, and then we can register replies, right? So one thing to keep in mind here is that replies can be submitted electronically depending on how your system is configured, or they can be sent to you via email, and then you register and manually enter them in the system. In either case, once those responses are registered, then we can just review them at a specific deadline and then make a decision who should get that contract from us, right? We can also have those replies registered blindly, so we do not see the details of that reply. It actually submitted and recorded against that RFQ, and then only revealed at the specific deadline, where all the replies from the vendors are revealed at the same time, and then a team decision is made on who should get that specific contract. So the blind replies are usually done to make sure that there is no favoritism going on, so you know that there are no decision made. We don't really know what the vendor supplies until every reply is received, and it's time to reveal them all. So that is all for now. That probably will conclude the list of procurement accounts payable topics that I wanted to discuss with you. If you would like to have another topic covered, just let me know in the comments. Click subscribe or like that video. Until the next time, see you later.